Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Friday, September 17th, 2021. Just wanted to do an update here on the markets, a few other things. A lot of the stuff I've been watching lately, crude oil, gold, natural gas, and wherever the trading ops are. We'll keep it relatively brief. I'm not going to cover 100 things, just a handful. Starting out here with the markets, because that is as I said recently, of getting more and more what I call check marks or, confidence on the sell signals. I'm referring to the sell signals that came back here. We broke the 60-minute bearish rising wedges on the indexes, SPY and QQQ. And just to recap, I know I do this every day. Most of you watch these videos. Some come in and out of the site. So after we broke down, we went sideways. Just to recap again, then we took out that 378.44-ish, roughly 378.50 was the bottom of that trading range. And say what you want about the market, but it's just been really lately the buy programs are just kicking in, sell programs, buyers and sellers right at these levels. And so, excuse me, we had multiple opportunities recently since the sell signal, breakdown there, and then a back test, back test, back test. Each and every one pointed out his objective shorting up. So, an active trader could have just swung down to the bottom of the channel, which you could have done today if you trade NQ. That's a 1% drop. What is that? Probably, well over $1,000 in your pocket. Or you can trade the MNQs. Keep in mind, I always mention that, if you're or wanting to get your feet wet with futures, you want to try, but you just don't like the contract size on the NQs or the ESs, just put an M in front of that. So you have MNQ, MES. Those are the micro or the mini contracts, micros, I believe, and I think they're about a tenth of the size of the NQs in the ES. And then for the Russell 2000, I haven't been doing a lot of coverage there because it's been a chop fest. So as I talked about, like a irregular EKG lately. But you have RTY. Is the small cap futures for the Russell 2000. But then when you go to the, if you want to do the mini ETFs, they do M2K. So they mix it up a little bit there. 2 is in the Russell 2000. So that's your small size contracts there. MNQ, MES for the NASDAQ or the S&P 500, and then the Russell. And here we're at. So I just want to mention, there it is. So another, quick trading op. But, I still think we're going to break that and at minimum come on down here again, bare minimum to my first target there. 369.50 may not be hit today. Wouldn't surprise me if it is, because if we take out this level, there should be quite a bit of stops in here, and it should be a pretty quick run down there if those stops are hit. So as much as we're down today, again, in the bigger picture of things, a 1% drop is not really anything to get excited about, but it is one of the bigger drops in a while. And what that does, well, let's just say we do break this today, or even Monday, next week, anytime, and let's say we come down here. But especially today, here's what would happen. I mentioned where this is the world of the 60-minute chart, the active trader, the trader that can game these 1% rips and dips back in the top and the bottom of the channel, put over $1,000 per contract each time that happens in your pocket. Or you come out here to the realm of the long-term charts, the swing trader, the trend trader. And here's my QQQ daily chart. I'm going to scroll all the way back. You can see here's a primary trend line, comes off the lows back in 2008, early 2009. And that's a trend line that I believe will be visited once again. And so longer term, whether this marks a top or we get a top up here, I think that trend line will be visited again at some point. So that's a long-term target. But all right, more importantly this is the low right here. This is what I call the COVID lows, when COVID first hit and that big drop into the March 2020 bottom. And there's a trend line that we have. We had one here before. That was my primary trend line at the time, and it broke, and there was a correction. It was the biggest correction, either the biggest or the second biggest since the bottom back there. And then that set up this new trend line. So this one, we had the low back here, multiple candles. Again, this is a weekly chart, so all that matters are the weekly closes. I'm going to say this. It's not my favorite trend line because we have, your initial point back here. And then, most of the reactions here. I'd like it better if we had some more distinct reactions along the way, like this back here. But with that being said, it is a trend line. It's valid enough that I pointed it out, and we're going to close below it this week. So, what I mean by all that, it's not a screaming sell signal. But just like the recent sell signals on the 60-minute charts that I said, hey, not crazy about them, but I'm going to take them for what they are on face value. They are sell signals. That was a couple weeks ago, and so far they've panned out. And so I'll say the same thing about this. So if that makes any sense, on a scale of 1 to 10, would I give it a 10 for a long-term sell signal? No, absolutely not. But there are some other things I see in there technically. Forget about all the divergences and the market breadth deterioration, excessive bullish sentiment, low put to call ratios, all that other stuff. That adds to that case. But I did want to point out, as I mentioned the other day, that if we get a solid sell signal here, especially if we build on it next week to the downside, you're going to have the first bearish PPO crossover in a while, and that's shown by this PPO histogram right here. So you can see it's heading lower. And if we get down crossover red, that'll mean a bearish crossover. And usually when you get those, not always, but usually it signals a big trend change. So these two were just little pullbacks. We haven't had a big correction since that drop back in the March lows. There's been trillions of dollars thrown into the economy and the stock market by both the Federal Reserve and the federal government. So that kind of limited any corrections, and but you can see the big drops, the biggest drops that we've had. You can go back at any point in time. I'll let you do it on your own chart, but you'll see most of the big corrections of bear markets were preceded by crossovers in that indicator, momentum indicator, PPO. All right, so enough on that. We'll see how this, you're going to close below it today unless they reverse it pretty hard, and they could. I mean, this is where the buyers should step in. If I was a bull right now, near term and intermediate term, looking for the market to take out these previous highs and keep going up, this is where I'd step in and buy. We recently put in that divergent low, but so far, as I pointed out, I wanted to watch that because it'll show a change of character. Normally you get a 60-minute divergent low, whether it's crude oil, the indexes, anything that's been in a strong bull trend, and that's you're usually off to the races, off to the next leg up to new highs. And so far, now it's not over yet because we haven't taken out that low, but so far the buyers have failed to follow through after that divergent low. And again, we got checked by resistance. So take it out, anytime soon we'll still have divergence, but if they can burn through that, that's what I'll be looking for. As I told you before, I think there's a good chance we get a bounce off T1 unless things somehow get pretty ugly next week. Maybe there's some bad economic news or whatever else, but that's it. So this is what I'm favoring right now. Come down here, bounce. If we do, look out to see if we have even bigger divergence, and it may set the stage for a pretty good size bounce. But there's many other factors, and that's what I'll be doing the rest of today and into over the weekend, is looking at the big market-leading FANG stocks. I have quite a few at support. I didn't want this video to go too long, so I'm going to cover those separately. But I have Facebook and Alphabet, and a lot of these big FANGs coming right up on or trading right on pretty significant trend lines right now, support. So what am I trying to say? Anything much more than that is going to do some technical damage on the longer term, the daily charts. So right now, still really living in this world of the 60-minute charts, but certainly keeping an eye on the daily and weeklies. And I do that because that will help me decide, hey, cover here and go long, cover here, reverse to longs, in swing trades, or get out, or sit tight, ride out any counter trend bounces and go for the big trade, go for a much larger drop. That's what I'll be focused on in the next few days here. Okay, so I just showed you QQQ at support. Good support we've been hitting for the last few days, the bottom of the recent trading range. And you have SPY just now hit T2. So T2 has been hit. We hit T1 back here. I'm going to color this up. And so that's it. Now we have another index, the other, what I call the other big index. The Dow, only 30 stocks, so I put more of my focus on the SPY and QQQ. There it is. And we also have some potential divergence here. So again, this is where the bulls, quote unquote, should step in. Positive divergence at support. However, I'm favoring, whether we bounce here or not, I still favor a move down at least to these, the near-term targets. I have listed the lowest near-term targets, the one I just showed you on QQQ, as well as this T3 at 436 on SPY. And again, if we go down through there, then that's going to get pretty ugly. It opens up the door for a much bigger move. And NQ, the futures, I'm going to zoom in a little tighter so you can see that on the video. Just, beautiful display of technical analysis. This was that recent trading range right here. Let me color up this tool. Same as that trading range in QQQ. We broke it on NQ. Remember, NQ, the futures, you're looking at QQQ, but with extra trades. These are the Globex futures. That means they trade around the clock, 3 in the morning. These guys are trading, so you're going to see more reactions, more candles. But it's the same thing. You would have taken this sell signal, maybe a partial, maybe a full position, depends who you are. Your next sell signal came when we broke that support right there, the recent trading range. You had another objective shorting up when you back tested it once, twice, 3, 4, 5 times, and then boom. So again, each of these rallies back to that have failed. The buyers or the sellers have stepped in. The buyers failed to step up and break us out through there. And so far the sellers are in control. But we have this other trading range right now. So just like QQQ, that's it. There's a little more downside. So if we have an ugly afternoon today, that's going to break that support. I would put very good odds on it. I could certainly cover right here and try to ride it back up, but I don't think it's worth. I think we've hit this enough times. And I think we're going to break that. If we don't break it today, I think it'll happen next week. And again, trade it as you want. If you want to try to go long, put a stop a little bit below, just don't get married to it. But that's where I think we're going. And that's really nice support. And that's why you're likely to see a bounce if and when we get there, especially if we have divergences. And let me just say this, if for some reason we don't, and we just slice right on through there, that would be very no bueno for the bulls. That would show me there's a big change in the supply dynamics. If the buyers don't step in and buy 15137 on NQ on the initial tag, and I'm talking, not just sometimes you just have a little momentum overshoot. I'm talking a solid breakdown through there. That would be pretty bad. But as of now, I think we'll get at least a tradable bounce off there. And if and when we get there, I'll give you an update at the time what I think, how far that bounce may go. ES traders or MES traders, right here, 4408.46 is my next target on SPY. I'm sorry, ES, the S&P 500. There's a little minor support we've been bouncing there, but that's my next target. It's actually the first target I've had here. This is that 60-minute wedge or trend line that was taken out, and then we, just like NQ, we traded sideways for a while, broke down below it. That gave you a sell signal or second sell signal there. Back tested a few times, rejected, and moving lower. So these are your levels: 4408.50 and then 4363, we'll call it, are the next targets and support levels on ES. And again, onus is on the bulls to step in and buy up this dip, whether we get there, whether we go a little lower. We're going to have divergence, at least in the near term if we go lower. And if they burn through those divergences, again, a change of character in the market. And we could start to see some real impulsive selling start to come in there, because that would be what I call a WTF moment for, dip buyers. Buy there, go through there. It'd be a little surprise, but if that level gives way, as well as those levels on NQ and QQQ, then that's that, hey, what's going on here? Buying the dip isn't working anymore, kind of thing. And next up is VXX. I shared this as a trade idea yesterday. I'll tell you, the VIX really hasn't gotten the memo yet, at least not short-term futures on the VIX. That's what this one tracks, and we're still below the trend line. It's only up 3.85%. I say only because that, with the NASDAQ being down 1% and at pretty important support, That tells me there's a lot of non-believers in this drop, or a lot, let's just say it, that the vast majority of market participants think that we're going to bounce off this level. Otherwise, they'd be buying a lot more put protection. So they're not buying a lot of puts. That's, the VIX is, formulated. It's a complex thing. You can look up how they calculate it, but it's based on a measure of put and call buying. And right now, yeah, it's up. Of course, it's going to be up when the Nasdaq 100 is down 1% and the S&P is almost down that much as well. But I just want to mention this train has not left the station. So if let's at this point we're right on support as I showed you with SPY and QQQ. You can take it here, or you can wait for those to break down. Once they break down, I think this thing will start to rip again. Like I said, the train hasn't left the station, but I think if it becomes apparent to most that we have broken support, this thing has a lot of upside potential. These first few targets I gave you, it's about a 60% return if that third one is hit. Okay, this one I've been very, very eager to see what would happen to lumber the first time we finally get a half decent down day in the market. It's been a long time. We had those sell signals a couple weeks ago, as I said, but they weren't followed by your usual impulsive selling. That's why I said, I wasn't crazy about them, but they were sell signals. They'd just be better if we had impulsive selling after the breakdowns. Now, with that being said, because what I was had mentioned a few weeks back is typically lumber and the stock market are positively correlated for simple logic. Stock market's going up, people are buying stocks. That denotes they're bullish on future economic growth expectations in the U.S., and therefore the housing market should be going up as well. Everything else, and therefore the demand for lumber. And again, you can take my word for it or go look at a 20-year comparison of lumber prices in the S&P 500 and you will see they move in concert. However, there are times with every security or every pair of securities that have a typical correlation that correlation is just disconnected, and that's been the case with lumber falling after the biggest bull run in history, one of the biggest corrections in history, and that tends to follow with any stock. Any stock goes crazy, goes parabolic, gets way ahead of itself, or the stock market gets way ahead of itself fundamentally from valuation basis and technically and everything else, you're going to have a bigger drop. And so that's what we had. Now, where am I going with that? Well, the stock market, as lumber was falling, plummeting, getting, what was like 70% drop off the highs, the stock market was powering on to new highs. So there was a direct inverse correlation. So I suspect that there are, the markets these days are largely driven by algorithmic trading programs. There's hedge funds, complex trading strategies, and for whatever reason, I think there was an inverse pair trade between the stock market and lumber. Maybe those shorting lumber going long the stock market as a hedge or vice versa. But maybe this is just a short-term thing. All I wanted to say is I'm seeing one of the bigger up days. We're up over 6%. We were up 7 right when I started the video in lumber, but broke out. So that's a nice move up in lumber futures today with the stock market being down. And again, whether that's just a one-day aberration, it is what I'm seeing now. It seems like these programs are firing off buys on lumber futures right now with the stock market going down. So that kind of opposite hedge trade may be in play, or maybe there's nothing there. Most importantly, again, that's just one little theory I have, but the fundamental or the technicals are the same. We had this divergent low right here recently put in, then we broke the minor trend line right there, and that set up, as I mentioned, this uptrend line. And we hit my first target there, or actually no, the first targets were here and here. We hit that 692.30 or 692-ish target to the button right there, pulled back, as expected. The initial tag of a price target often produces a reaction, and we pulled right back to that uptrend line, and so far the buyers have stepped in. So anyways, we'll see. And that 692 has already been hit, so that should open the door up for that next target there if we can continue to get some upside momentum here. 747.34. And like any trade, don't get married to it. As I mentioned before, that's an objective level, either stop somewhat below that trend line, or this is really good support there now. I think about 552. So I think at the most to stop somewhat below that 552 level. Okay, and then there's natural gas. As I put out a post this morning before just before the market opened, we broke that uptrend line on the 60-minute chart right here. I'll zoom in a little. Before I zoom in, let me just say this is still a potential target. That uptrend line off the lows back here. That was our target right here from this short trade. We hit it, bounced, and I mentioned reversing, to a long position there in that gas, and then got in a little too early here on the short when we broke that wedge. But that short was also based and still is off long-term resistance. We're relatively not too far above that now, so this may be a momentum-fueled overshoot. And if so, we fall back down. If that target is hit, first target right here is, I'll just read them out, 50, call that 505. 457, 441, and then the trend line. But if that is hit, then that's going to mean that we had a false breakout or just an overshoot of that long-term resistance on the daily chart. Remember, this is a 60-minute chart here. So I just wanted to say, as of now, that fired off that sell signal or objective short entry. Here, I'll zoom in for you. And again, that was posted on the chart this morning. We haven't really done much since then, but it looks like a little bit of a if you zoom in really tight, I'll need to do that so you can see it. Maybe a little bit of a bear flagging action going on right now. Let me zoom in nice and tight, and this is what I'm talking about. You have an impulsive drop, and a bearish pennant would be more accurate. Same thing. Flag just looks like this. You have let me draw it here, an impulsive move down, then a flag shape consolidation. Then you break down, and your measured target is the length of the flagpole. The move leading down, added to the top of the flag. And in a bearish pennant, again, it just takes a pennant shape instead, but it's the same projection. You take the flagpole. And so you can see that would roughly project, the target would come right down to that 505 target there that I have on nat gas. If we get the sell signal. Sell signal comes, again, if you get an impulsive break down below the flag, and it should, or the pennant. It should happen soon if it's going to. Otherwise, the pennant gets too long in relation to the flagpole, and then it's no longer that pattern. All right, I think I'm going to wrap it up here. Yeah, the other ones, crude oil, I'm going to have to redo my chart. All the lines cleared out. Sometimes that happens. I don't even think the contracts rolled. But it's same outlook in crude. It's still, this is a 2-hour chart. It's still making a series of these lower highs. And I still think crude oil is going lower. And it will greatly help if the stock market breaks those support levels we're on right now. And opens the door to the next wave of selling in the stock market. That will most likely, not guaranteed, but most likely put pressure on crude and spark the next leg down. So that's crude oil. And then last but not least, again, one that I updated this morning for you, AMC. This has been, a long-term trade, really. It was back here. It was mentioned as a short on the break of the triangle pattern on the daily chart. I also gave you a 60-minute chart with targets, and I have this daily chart with different targets. So here on the daily, we hit that first target, and it's just been sideways for a long time since then, but until recently, we came up and hit this resistance zone here at the very top of that resistance zone right there, rejected, and then we went on to break the trend line, which I said that would trigger the next objective short entry. You had an objective short at the top of the resistance zone, and also another objective short entry on that break right there. And we've had 1, 2, 3 follow-up red candles so far. So more selling, and still maintain these long-term targets. T2 zone from about 20 down to 17.50. T3 is 14.55, give or take. T4 $12, and T5 all the way down to $9. So probably going to take the market breaking its back to get there. Who knows? These apes, they call them, the Reddit crowd, they've been tenacious just holding on to this one. But from a valuation and, more importantly to me, a technical perspective, it says it's going down a lot lower. Okay, I'm going to wrap it up here, get the video out to you guys. This has been Randy Finney with Right Side of the Chart. If I don't do another video today, have a great weekend.